Okay, hello all. Welcome to Strategy 5. I know that a lot of you have come through 1 to 4. Hopefully by now you've possibly already found a strategy that suits you. But what we'll do is we'll continuously go through some of these strategies. A lot of them will be using confluence with the high probability opportunities we highlight on the Telegram channel every morning, and this is no different. So we're going to follow on from strategy 4 in that we are going to introduce a different kind of moving average. We're also going to introduce another indicator, and combined we can see a pretty useful a strategy. Okay, so first things first, guys, moving average we've put on here is a little bit different to what a lot of you have probably experienced in the past. And we're going to start off with the period here. So period 5 is not necessarily different, but I think what's different to what a lot of you have seen before is the shift. Okay, so we've shifted this forward somewhat, and what you may say is a moving average generally takes, in this instance, the 5 previous candles and it starts averaging them out. Okay, by shifting them, we take those 5 candles previous to the ones that we've had now, and we shift it forward. So there's no such thing as a leading indicator, in my opinion. I think every indicator is somewhat lagging, although some are less lagging than others. So if there was a pure leading indicator, we'd probably all be sitting in the Bahamas somewhere. But this just allows us a more aggressive entry. All right, now the reason why I don't mind having a more aggressive entry is because given that we have identified our trading opportunity of the higher time frames within those Telegram channel opportunities, I don't mind trying to get in a little bit quicker than usual. I think it's also important to highlight that this is again a linear weighted moving average method, and again guys, this just kind of takes the most recent candles with a little bit more weight. All right, and that way we are able to get in more aggressively, I should say. Okay, so second of all, what I've added, guys, this is a MACD, or a moving average convergence divergence indicator, guys, and this is a typical kind of oscillator. It is contrarian in nature, so what we'll go through that shortly, but it's also a measure of momentum. All right, and those are techniques that we've learned in the past. All right, so here we have a zero line, this big black line down the middle. That's what I'll refer to as a water line, guys, and that just indicates when I'm on my contra view. All right, so when I am above, so as you can see above the black line, I'm looking for reasons to go short. Okay, so it's a contrarian indicator. When I'm above, I'm looking to go short, so I'm looking to sell. When my histogram or my moving average here in this instance is below these 0 points or the water line, that means I'm looking for reasons to buy or go long. All right, so I hope that part makes sense to you. Here you can see, guys, all these green bars, which are referred to as the histogram, and also a red moving average. Okay, now when we have a histogram that is outside, so as you can see, these are all outside the red line, the closer. So your Manhattans are above the red moving average. That may indicate, although your red moving average is suggesting that momentum is slowing, as long as the green or the Manhattans are outside of that red moving average, that just indicates that we're not ready yet to trade. Okay, what I'm ideally looking for is a histogram inside the red moving average, and that will suggest to me that momentum has slowed sufficiently enough to take a trade, and then we can start taking those trades. Okay. When we have them both on the same chart, this is pretty much how this chart will look. We have both the momentum or the MACD indicator as well as our moving average. Okay, now I'm going to go through the last long example as well as the long short example, just so that you can see how we use this particular strategy to execute. Again, guys, it's on a lower time frame. I would suggest you using a 5-minute chart, but there's nothing stopping you either from using a 15-minute chart as you so wish. So we'll go through that shortly. And this indicator, or this strategy rather, is very, very similar to the previous strategy, although sometimes this is visually a little bit easier to comprehend compared to some of those other ones. Okay. Now, 5-minute chart will start off. Firstly, very similar to the last strategy, guys. We're looking for two things. Okay, we are looking for a bottom. This is a 5-minute chart, and we are looking for a bottom. Why are we looking for a bottom? Because we are looking to go long. So the first thing I'm looking for is I want my green histogram as well as my red moving average below. Okay, I want it below this water line over here. Okay, why do I want it below? Because it's contrarian. I'm looking for reasons to go long. I'm looking for reasons to buy, and with it being below the zero, it should indicate, or it could indicate rather, that that opportunity is brewing. All I have to do now is wait for momentum to slow. Okay, you'll find lots of those opportunities here, guys. You almost find these like small little bubbles here that start to form just below there. Okay, which indicates that we have that opportunity starting to present itself. Now that we have the trade identification, we're looking for two things. Firstly, not unlike the previous strategy, it's a double confirmation. So I'm looking for two things. I'm looking for my histogram or my Manhattan to close inside the red moving average on the MACD. Reason being is anything that is above it, such as this here, as you can see, just tells me that although momentum may be starting to shift somewhat, we are not ready to trade. Okay, so what do I look for? I look for that green histogram or Manhattan to close inside. Okay, so on that candle, that's my first confirmation that I'm ready to trade. Simultaneously, I want my candle or my price chart to close inside the moving average. Okay, again, guys, like the previous strategy, it's not going to happen at the same time. They will be very, very close. Not to say that it'll never happen at the same time, but they will be very, very close. So here you can see this closed inside the moving average, but my histogram only closed inside on the next candle. Okay, so what that suggests to me is that I can open the trade on the very next candle. All right, so very, very similar to the previous. We can see a 191.35. I suspect that we would have had a similar entry on our previous strategy. We can use just below the previous low there, and then as you can see, 35 points. Why am I looking for 35 points, guys? Same as always, because we're on a short time frame, we're looking for a 1R. Okay, so entry equals 1.9135, stop loss 1.91. That means the difference between that is 35. So 1R, or 1 times 35, equals me a take profit of 35 points, meaning that my all-in is 1.9170. Okay, so we can quickly pop that on there. And as you can see, it wasn't long before we got that nice entry. Okay, so 15-minute chart, guys. Again, much like the previous one, if you miss the opportunity on the 5-minute charts, you can always use that 15-minute chart. All right, so multiple entries if you so choose, but it allows you that flexibility that if you aren't able to sit in front of the screens and you miss an opportunity, you will get another opportunity the same day, first of all. Second of all, some people like myself just prefer trading off that 15-minute chart. It may be bigger returns for me, and that's just a personality thing. All right, so same example, guys. We can see the opportunity starting to brew. We finally got a histogram close below the Manhattan, and at the same time we had a candle close inside of the moving average. Okay, so where do we have that? Let's just do this quickly. All right, so there's our entry at 91.70. Our stop loss is at around 91, so we're looking around 50 to 60 points. Okay, and there you can see you had the same result. In this case, it wasn't a 35-point gain. This was more of a 70-point gain. Okay, let's have a look quickly at the last short trade we had, which was the DAX. That was on the 3rd of September. Guys, and if you can see a lot of similarities between this strategy and strategy 4, you'd be 100% correct. There are a lot of people, including myself, that find it easier to identify opportunity on a MACD rather than a stochastic. Okay, so for me, visually, this is easier to understand. A lot of you will be different, and that's the beauty of trading, guys, and also the beauty of how many indicators we can use to illustrate those opportunities. Okay, so first things first, we identify this opportunity here, guys, just starting to lose a little bit of momentum. We can also see price chart that is starting to paint some opportunity. We finally get a histogram. Remember, anything that is outside, any Manhattan outside of my red moving average is not a trading opportunity. And round about the same time, we get a candle close inside of the moving average. Okay, so there's my entry. There's my take profit, my stop loss rather. And what we have here is we have an entry of 134.30. I have a stop loss above the previous high of 134.65. What does that give me, guys? The difference there is 35 points. That means that my R equals 35 points. Remember, I want a 1R, so it gives me 35 point take profit, which means my exit will equal 133.95. Okay, so pretty easy calc, guys. Allows us to manage our risk. We can pop that on there, and within sort of 20 to 30 minutes we are able to get that take profit hit. Okay, and again, if you miss the trade, guys, you can always pop onto the 15-minute chart and just go through the same processes. All right, so the same discipline process. Here you can see the trade identification. You can see price does look as though we're starting to run out of momentum. First things first, guys, I'm looking for two things. I'm looking for a green histogram to close below my red moving average. At the same time, I have got closed price action below the moving average. So there you can see within that vicinity. So that means that my entry on the 15-minute chart is on this candle over here. So my entry would be 133.77. Let's call it 133.75 just to round off. My stop loss would be above my high for the day, so 133.65, let's call it. Okay, so the difference between my entry at 133.75 and 134.65 gives me an R of 90 points. Okay, which means that my take profit will be 90 points. In this instance, it will be 132.85. We can pop that on there. And as you can see, within about an hour, hour and a half, we were able to make those gains. Okay, guys, so another very, very simple strategy to use. Like I said, you don't necessarily need to use this particular strategy with the morning opportunities. Some of you may decide to specialize in a instrument or a pair, which certainly is not a bad thing to do. And this will allow you the opportunity to make those consistent gains. Again, very similar to strategy 4, guys, just as effective. It's just visually a little bit easier. The moving average allows for a more aggressive entry, and that's to cater for the more conservative entry of the MACD. Again, there's a built-in risk management system in that you are revolving your stops around key support and resistance levels, and by using a sensible take profit of 1 times on such a short time frame, I think you'll have some great success with this one. Alrighty, guys, so thanks for joining us. I hope that you enjoyed it, and I do hope that if you haven't found a strategy that suits your needs now, you can start looking towards strategy 6.